Welcome to today's market report.
European stock markets are seeing opening mixed on Wednesday, with a torrent of earnings due while investors wait for the US to agree its latest stimulus package. At 7 o'clock this morning, DAX traded 0.2% higher, FTSE 100 fell 0.1%, CAC 40 in France dropped 0.4%. A day after European leaders signed off on their historic €750 billion recovery package to revive the countries hard hit by the COVID-19 pandemic, as well as the bloc's next 7-year budget worth about €1.1 trillion, the focus now turns to the ratification process.
We do not expect the national parliaments to become a hurdle, but the EU Parliament may likely be disappointed regarding the size of the final budget, said analysts at Danske Bank. At the same time, uncertainty reigns over the immediate prospects for more financial aid in the US, the largest economy in the world. In addition to major differences between the two main parties, Senate Republicans appear to be at odds, both themselves and with the administration, over how to craft the package. Debate comes amid signs that economic recovery in the US is leveling off amid a second surge in coronavirus cases. The US death toll hit 141,000 on Tuesday, according to Johns Hopkins University, as the country recorded over 1,000 deaths within a 24-hour period for the first time since June. In corporate news, Fiat Chrysler is in the news after the automaker announced an expansion of its partnership with self-driving car company Waymo to commercial vehicles. Industrial heavyweights AkzoNobel and ABB both beat expectations for the quarter through June, but a lot of the focus on Wednesday will be on the likes of Tesla and Microsoft, who are due to release earnings on Wall Street later. Oil price retraced after a bigger than expected crude inventory build in the United States, suggesting a dent in demand from the world's biggest oil consumer. US crude futures traded 0.6% lower at $41.69 a barrel, whilst Brent contract fell 0.4% to $44.13 a barrel. Gold futures rose 0.9% to $1,860.55 per ounce. On the FX front, GBP USD receded to 1.2715 on Wednesday, but the cable is supported by BOE's holding economic outlook. According to the OCBC Bank, the pair is expected to target the 128.10 June high in the next few days. Also challenging the pair would be coronavirus woes and the UK-China tussle. However, both remain optimistic as the US dollar stays on the back foot. Early in the Asian session, the Daily Telegraph came out with the headlines saying Britain close to abandoning hope of Brexit trade deal. The news cites anonymous senior sources in the UK government to say that the ministers now believe that Britain and the EU will fail to sign a post-Brexit trade deal, with just days to go until Boris Johnson's July deadline for an outline agreement passes. On the contrary, the UK's trade talks with the US go as smoothly, even as the UK anticipates no deal before the American presidential election, as per the Financial Times. Elsewhere, a group of senior scientists warned the Lords the government must ramp up its capacity to spot and contain coronavirus outbreaks if it is to avoid a potentially devastating second wave of infections this winter. The Republic World said that the UK Prime Minister Boris Johnson has claimed that it is unlikely that the COVID-19 vaccine will be ready by the end of this year. Furthermore, chatters surrounding Russia's role in the Brexit referendum added political noises to the sound. Eurodollar surged to 115.47, an 18-month high, and now targets the 2019 peak at 115.70. According to the UOB group, Eurodollar could test the 116 neighborhood in the next weeks. The dollar index was up 0.1% at 95.097. This is today's market news. Thanks for listening. We'll see you next time.